J-Blog, January 3rd, 2010. Happy New Year. It's 2010, another year started. Everyone has already published their what's going to happen in 2010. I might as well give you some ideas of what I think is going to happen. It doesn't really change that much from what I thought was going to happen last year, which obviously did not turn out to be exactly as I predicted. But sometimes things take a little bit longer than they would unless I'm missing something, and I'm not, which is possible. In any case, let's start this out by looking at the last 5 days of 2009, trading days of 2009, the S&P 500. We had here, and this is a 5-minute chart, 5 days. And what's interesting here is we had lower highs, and then we had this strong drop on Thursday, the 31st. The S&P dropped quite dramatically towards the end of the day. Not exactly sure what that means for Monday morning. We'll find out, suppose. But it certainly is not the most bullish end that I could have imagined. Let's look at the overall market for the last 6 months. There's a little blip here. It did not show. Two things that are important here. Of course, this longer trend line here that started quite a ways ago in May, I believe. Let's find where this actually started. Started in March, and that was violated in November. And then a second line, I drew a second line here, which has a bit more support because we have 1, 2, 3, 4, 5, and then we go from there. And that has not been violated yet. We have an exponential moving average of 10 over 30. We definitely have that still in a bullish configuration, so the market is officially still bullish, as is, and this quite dramatic drop on the 31st in the big chart does not show very much, but it was quite dramatic just because it happened just towards the end of that day. Other things that have happened, Apple has broken through support line here that have started about the same time. It's broken twice, but it has made a new high here. Still, that's a trend violation right here. We'll see how that goes. Goldman Sachs picked up a little bit. I bought some Goldman Sachs on Wednesday, and then actually sold it on Friday with a profit. I had covered my short the previous day when it became clear that Goldman Sachs did not want to drop any further, and that was the right thing to do. What other charts are interesting? DE, I traded some of that. I just day traded DE for a few. I didn't day trade it. I went short DE somewhere around here and covered it right there. Caterpillar, another one that looks very weak on a chart. Agrium, one of my favorites. Not yet as weak. Mosaic, Potash, and we see some stuff here. All of these companies are somehow involved in the agricultural market, farming. It is interesting that they had such a significant run-up and have been dropping. Actually, Potash has turned bearish when you're looking at the 1030 exponential moving average. looking at the sectors, we have again, here's a 6-month chart of the S&P. Still definitely on the bullish side. Materials still bullish. Energy is up and down, can't make up its mind where it wants to go. Stochastic is dipping under here. Materials, stochastic is dipping under. The S&P stochastic once again is dipping under. The one that I have purchased some puts on myself is the consumer discretionary. I bought the 31s for 2011. If we do have a downturn, then this, in my mind, is a very optimistic rise. Basically, consumer discretionary went straight up. There's no reason for it. It's consumer staples that should be going up, because even if large companies are starting to recover, there's no reason for the consumer to once again have money. Healthcare took a big dip on Friday. That was interesting. But there's a lot of things here that are rolling over. Utilities, the possibility of higher interest rates, utilities carrying a lot of debt all the time would of course be affected, and then profit margins would be affected also. Utilities were bought mostly on their dividends, but they have become overvalued as well, and their dividends are no longer really that good a deal as they were a little bit further down. Here's consumer staples, quite strong but not as strong as consumer discretionary, so that makes no sense whatsoever. Technology, very strong. This whole rally has been running on technology. And the big question for 2010 is this rally real? Is the recovery real? Or is this simply stimulus packages? Talk about an increase in the US economy, which basically means an increase in the GDP. Now, as I've pointed out before, GDP includes government spending. It does not include government borrowing. The US government will have to start paying about $250 billion in interest every year now on all the money that has been borrowed to bail out banks, basically, and big businesses. And that money will have to come from somewhere. That money will have to come from taxes. That money will have to come from additional borrowing. Where that money comes from, the interest needs to be paid, and that is bad news for the people who have to pay that. It's money that will no longer be accessible. Also, the increasing amount of borrowing that U.S. government, as well as other governments around the world, are doing is cutting into the money that can be borrowed by business, and without business borrowing, there can be no growth. So businesses are competing with governments for borrowing money. That cannot work. Then we have, as I said, another 2 real estate bubbles coming to an end. We shall see. I continue being bearish about 2010. I'm surprised how well 2009 turned out in the end, but if you continue running up the Visa cards, realistically, you can make yourself look really good for a long time period. Sooner or later, the creditors want to be paid. There's nothing to be done about that. So, I'm not crazy about this market. I'm not crazy about 2010 or 2011 for that matter for now. But so I'll still have a large short position, and not that large a long position. But we'll see. See what happens. That's about as far as I'll go. So all the best. Have a good week, and hope you make lots of money.